I've been away for the last few days, and no, the CIA didn't get me, and I didn't run to the bunker just yet. But I needed to take a step back to breathe and heal a little. Life threw some really big body blows at me, emotionally and physically, and they were heavy hits. Now, I love you guys and thank you all for all the supportive comments. Now, I took some time to reflect and refocus, and now I'm back ready to fearmonger everyone as the world collapses. And boy, is it collapsing hard again. But during this period, I won't be doing all those fancy thumbnails, right? Just happen, it's happening until I fully work through things. And once again, I love you guys, and I will also be reducing my volume until I get back on track. So let's talk about the US economy and how it won't get unscathed from Trump's desperate attack on Iran. So the US started their airstrikes on Fordo, Natanz, and Isfahan. Well, I know right now we are more or less in a ceasefire, but let's talk more about it as well. Now, while I was gone, Trump decided to escalate things, and guys, this is a move of desperation. Don't get it twisted. He desperately needs an off ramp, but yet wants to avoid all-out war and avoid sending in the troops. Now, of course, as predicted, oil prices started to spike where? To the moon. Now, this is horrific for an economy that's leveraged as the US. Now, West Texas hit around $73 while Brent went well above $80 at one point, which is horrific for the claim of inflation that's supposed to collapse. There is no inflation, right? Remember Besant's own words. But when you decide to smash Iran, which is centered in the Middle East, you are just asking for trouble. Now, as we speak, the S&P is near all-time highs, but this might be betraying the undercurrents of what's really going on. And it's really important that we look back at history to get some context. Now, of course, things are different today, but we could be in for a really nasty surprise. Now, during the first Gulf War, when oil spiked to $40, just look at the S&P, a nasty drop from 375 down to under 300, and that's more than a 20% collapse. So brace for impact if we get a repeat scenario. Remember guys, the markets are still disgustingly overpriced. Interest rates are still at an all-time high, and inflation is going to rise. Now the hammering coming for US consumers is very real. If consumer strength falls, then we get a whole domino effect happening. Company earnings collapse and unemployment starts to go up. And once again, this is classic Washington, tinkering with foreign policy and oblivious to the risk it could do to the economy. Now the big problem here is Iran's response. They have officially threatened to block the Strait of Hormuz, and I think this needs no introduction. 20% of the world's oil flow or the demand passes through this. Now you cut this off, oil prices will spike well above $100. And guess what will happen to global inflation? It takes off like a rocket. And here's the funny thing. The US just asked China for help. Now this is just hilarious. We have Marco Rubio begging China to stop Iran from closing the strait. And if this doesn't tell you who has the power in geopolitics, nothing will. And yes, we know China has good relations with Iran, but Rubio asking China to intervene is next level comedy. After you hammer China's economy, do you think the Chinese will intervene? Probably not.
Well, I encourage the Chinese government in Beijing to call them about that because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours. It would be, I think, a massive escalation that would merit a response, not just by us, but from others.
And here's something that Rubio just doesn't understand. Yes, it's true that China gets a ton of oil from the Middle East, but I want us to look closer at other suppliers that are outside of the Middle East. Now, Rubio is giving an empty threat that he can't deliver. China will do what China wants to do because they aren't totally dependent on energy from the Middle East. Now, Beijing's top suppliers are Russia and Malaysia, far away from the Middle East. Now, sure, Saudi Arabia, Oman, and Iraq, they are very big suppliers, but other suppliers will start to pick up the slack over time. And this will include Brazil, Canada, and shipments from Africa. So it's really important to put things into perspective here. Now, will China's manufacturing get affected? Most definitely it will, but will it collapse? No, it won't. And it all boils down to how China has diversified the energy mix. Now, energy mix is simple. It's the different types of energy that comprises China's power generation. Is it fossil fuels or solar, for example? And it's really important to unpack this. Now, China's share of energy generation in 2024 reveals everything. More than 60% were from coal, and most coal imports comes from Indonesia, Australia, and Russia. And the next biggest fossil fuel is gas at 3%. Oil doesn't even register here. But what's amazing is China's renewable energy share. Almost a third of total energy generation comes from solar, wind, and hydro. And this amount will only continue to grow because China's build out is insane. Now, if we throw in nuclear power, China is completely safe from a total oil embargo. Prices will go up, certain industries like plastics will suffer a lot. But if Rubio thinks Chinese factories will collapse, he better think again. China's not that easy to go down. They have thought things through decades ahead. So as this goes on, we have updates about Trump announcing a ceasefire, right, between Iran and Israel. Now, apparently, this was done after an attack on a US base in Qatar. And if we look at Trump's message on Truth Social, it's truly bizarre. And I wonder how you can call this a victory. Congratulations to everyone. It has been fully agreed by and between Israel and Iran there will be a complete and total ceasefire. And Trump calls this the 12-day war. Now, 12 days of insanity. Well, the fact is that the US did intervene. The world has seen this happen and is actually eroding US diplomatic power even more. Now, if we look back at the Ukraine war, at least Biden didn't directly enter the conflict with Russia. Now, granted, Russia is a nuclear power, but the line now has been crossed, which feeds into the next theme. Countries will want to break away. And the most obvious way will be getting rid of the dollar. Now, firstly, the dollar has been falling in value despite the escalations in the Middle East just before the ceasefire. And here's the problem with the dollar. Now, the Fed said they could support reducing interest rates as soon as July. And guess what happened? The strength of the US dollar fell. Now there's even less incentive holding the greenback, especially where short-term rates are going to fall. Now, would you lend the US government money for 30 years? Probably not. And you won't lend them money for 3 months if short-term rates head down. There's even less incentive. Even though we have a ceasefire going on, and if it even lasts, the dollar is still in jeopardy. The problem lies in the strength of the US economy more than anything else. And this is where we need to wake up and smell the coffee. And there are only 3 scenarios I can envision that will allow the dollar to really strengthen in a considerable way. Now, the chances are slim and slim. Well, he just left the building, right? So it's just me trying to keep it real here. If we really want dollar strength to come back, Trump would have to end the trade war or dial it back significantly. The global tariff rate has to come down. We are still well over 20% today, and we need more trade agreements that actually make sense. Now, the next indicator is resilient economic data from the US coming out. We need to see US inflation come down and strong employment data. But in reality, we are witnessing horrible jobless claims and housing data that is plunging, neither of which are good for the US economy. And here's the final shoe to drop, or in this case, probably won't drop. Trump would have to bet that the rest of the global economy collapses, but it is not likely. The world without the US is more resilient than he thinks. Now, sure, if global economies all crash, then the dollar could definitely rally. Now, this isn't likely because the next biggest driver in the world, which is the Chinese economy, is still going strong. And with that, they can export deflation to the world, while the US is stuck in a self-imposed inflation trap. Now, if we look at Chinese exports in May, the data is very telling. Chinese exports to the US dropped by 34%. Now, that seems really horrific, but overall exports grew by around 5%. Why? Because their foreign exports to other countries ex-US grew by over 11%. And in June, we can expect Chinese exports to continue to sell out like hotcakes. Now, the tariff war is starting to backfire, and I don't think Trump himself even understands why. As countries get used to affordable Chinese goods, the odds of them trading with the US grow slimmer and slimmer. Why would you buy the same US product for 50% more, even if the quality is the same or even slightly better? You need to keep your cost of production low, so you go and you buy Chinese. It's key to understand that the Chinese are actively taking steps to decouple from the US market. There's no future in it for them, and thankfully Beijing has a very big trump card to play, not pun intended here. Besides just textile handbags, Chinese exports of industrial robots and pumps to Europe have risen dramatically since the start of the year. And this is why the US is trying to suppress China's tech innovation, especially in semiconductors and chips. Even if you're G7 ally, if the price is right, you will still buy a Chinese product, won't you? Especially if Trump still wants to punish your own exports to the US consumer market. The problem with trying to reverse the dollar collapse is tackling the problem of consumer strength. When you decide to tariff the world, you are cutting away cheap inputs and products into your own economy. Now, Switzerland, for example, exports a ton of pharmaceuticals to the US. And since Trump imposed his tariffs, imports collapsed by 42%. Now, that's a very big drop, but the consequences are undeniable. US consumers are hurting and their budgets are being torn apart. Now, imagine your medicine prices flying to the moon while interest rates are still sky high. Now, I get that equity prices, they are very high, right? All-time high. But it's important to realize that the stock market is not the economy. Two very different things. And eventually, if the economy gets hammered enough, then stock prices will follow through and collapse. And as we speak, it's not looking good at all. According to the Conference Board Economic Index, we have our sixth straight monthly decline, and make no mistake, this is horrific. The LEI has dropped by 16% from the peak and is at its lowest level in 9 years, and such declines have preceded every US recession since 1960. So, will we get a recession? It all depends, right? Chances are, unless the Federal Reserve stops slamming rates down, it's on the menu, it's on the cards. But can Powell really do that? And if we do, we can expect US inflation to shoot up once again. But wait, I don't think he can last that long, and the new Fed chair will likely be a Trump ally. But let me know what you think. How did Trump handle the Middle East situation, and which economy will collapse first, the US or China? So let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.